Kaushik, just moving to the external sector, as you pointed out, there was a fair amount of commentary around the external sector. They would never, sort of admit that the rupee or what's happening globally is playing into their rate hike decision. But in many ways, they did sort of, signal that. Even in the inflation section, they do mention the risk from a, weaker currency, etc. So, the global factors very much are playing on their mind right now.
Yeah, so the broader view is that these are all not isolated islands. Exchange rate, interest rates, these are all connected in some way, right? So when the Fed is going to hike so much, and they have hiked and they're going to go for 50 or 75 again, today we have the non-farm payrolls report. So the Fed speak, if you see the last few days, they have tried to dispel the notion that Fed is going to pause and cut rates, and the Fed is trying hard to say that we are not done yet, or we are not anywhere close to saying that we are done. And they could move up rates to 3.8 or 4% by early next year. In that situation, you can't stay in an island and say, oh, I'm not going to do anything because, and it's not that India's inflation has come down to such extent that you're getting that kind of comfort. I mean, look at the rice inflation risk that is there given the sowing. You don't know what will happen after 3 months. So the best way to do policy at this point of time is go with the flow. If you have inflation on the higher side and people are giving more rate hikes for the time being, you also do the same, not maybe 1:1. And then when you go forward, you decide whether you need to do it or not. As Rahul said, at some point of time, if they feel they don't need to do it, having done more in the previous few meetings, they can give it a pass. I'm not saying that you should not be pragmatic and you have to be mechanical like a machine. But at this point, I think 50 was required. If RBI sounded dovish, when Bank of England to ECB to everybody hiking 50, it would have looked a little, kind of strange. And if you look at the trade deficit number, I mean, we are not expecting 31 billion per month from here on. Oil has come down. Exports will go up, as Dr. Patra said. But even if you apply a 22, 23 billion, trade deficit per month, your current account deficit is not going to come down below 110 billion. And that itself is giving you a BOP deficit of 60 billion. We have already seen rupee kind of, being under pressure. So my limited point is that there has to be some minimum interest differential that has to be maintained between the repo rate and the Fed funds rate. You can debate what it is, but you cannot keep on squeezing it and expecting that the rupee or the external sector will be not under any kind of pressure. The foreign investors have to see value to invest in India. From that standpoint, a little bit of interest differential has to be maintained. And I think RBI has done a very good thing of hiking 50 basis points today.
Absolutely. Rahul, you want to jump in on this? I think some, people have a view on what that interest rate differential should be. But even if you don't, what Kaushik is saying makes absolute sense.
No, it does. And I think one thing that clearly stands out is that today's move, being a bit more aggressive than what perhaps was being anticipated, certainly in light of declining commodity prices, will do further to enhance the credibility of actions, right? And as Kaushik rightly said, that when everyone is, going aggressively, there's no real reason for the RBI to stand out from the crowd, even if an opportunity presents itself. I think where, I probably have a slight difference of opinion is, interest rates are not going to help stabilize the rupee, right? I mean, an interest rate defense historically has not been a good thing, but then not having that in the arsenal also is going to create some challenges, or it will make you stand out. So I do agree that, we need to have some degree of interest rate differentials with the major central banks. But then, if inflation is declining, and a lot of India's inflation is actually going to be domestically decided, it's not just going to be a function of global prices. In that particular situation, I think we should do what's right for us. And, the RBI certainly seems to have kind of indicated a certain greater degree of data dependency going forward, which I think is the right approach, particularly at this point in the cycle.